Prakash Diwan is now joining us for some thoughts on the market. Prakash, hi, good afternoon. Last hour of the week in terms of trading. I just want to start by getting your thoughts. You're someone who tracks a lot of mid caps, small caps. I don't reckon the question whether one should take profits in mid caps is justified, because then the question is profits and what, right? Just like you can't buy mid caps, or maybe you can buy a mid cap fund. Because it's so varied, so many different sectors, subsectors, smaller segments, etc. But can we say something about the broader rally and the approach one should have after this? I was just looking at the rally in the mid and small cap space. Started from late March, right? 29th of March was the low, and I was looking at the NSE 500 group of companies. Only 40 out of 500 stocks are even lower, and I counted about 15 stocks out of these 500 which are up over 50%. If I look at everything which is trading on the NSE, the numbers I'm assuming would be even starker, because the rallies happen in very small stocks as well, which fall outside the 500 group. But what's your sense, Prakash, this group and the approach, mentally the approach one should have now?
Yeah, so Prashant, very interesting set of statistics that you put forth. It's visible in the kind of texture of the market. And just to give you, and just to add to what you mentioned, while the Nifty's moved from 18,600 all the way down, come back full circle, there are lots of stocks which are still on the Nifty constitute, which are down 30%, 40%, 20%. So you've got an Asian Paint which is minus 15%, and Infosys which is close to 24% down. So what it's telling us is that while the Nifty's come back to skirting around the new highs, a lot of stocks have lost ground. On the other side, what has absorbed all the capital allocation that's come into the markets? It's the broader markets. Now, why that's happened is very clear. Post-December, when the broader market started slipping down very rapidly and probably making a low end of March, you actually lost a lot of ground and a lot of enthusiasm. And after that, all the smart money that's been coming in has been coming into businesses which have continued to clock very decent results, whether it's December or March, probably in anticipation of the next quarter, June end numbers. So, the market has seen money come in not from retail in general, but it's a lot of the HNI money that's coming, Prashant. And that's usually very, very pointed, very specific. So I think it's primarily because of the kind of money, because of the nature of allocation that's coming. And how do you approach this market further? I think you'll be best placed to allocate money to small cap funds or mid cap funds, because you have a diversification. You don't need to time the entry exits and some of the counters. And it's a tricky market, Prashant. Let's face it. I mean, volatility is absolutely stunning. I mean, I've not seen this kind of volatility and uncertainty in markets in the last so many years. So it's not going to be easy for people to navigate through individual stock allocation, but it's better to go through the fund route. Unfortunately, we don't have a very major smattering of ETFs in that segment, in the small cap, micro cap. But wherever actively managed funds have done well and stuck to the knitting of sorts, focused on particular general themes, I think investors will be will be better off doing that.
All right, Prakash, request you to stay with us. The stock of the last 24 hours has to be IEX.
So there you heard it. Both the players, the large incumbent dominant player, that's IEX, and some of the newer rivals like HPX that have also set up operations in the last 1 year or so. Prakash, now this IEX story, I mean, obviously it's far more interesting now in the last 24 hours. But anyway, this is a stock that's been going through a long derating, right? It's done nothing in the last 1 year. It's declined some 30-35%. So I don't know. I mean, would you right now catch the falling knife, or is it a complete steer clear for you?
So, Sami, good afternoon. The answer to your question is in the question itself. If it were to be termed as a falling knife, absolutely you're not trying to catch it. And my worry is not just, the interpretation of this coupling-related regulatory announcement, but it's more to do with the kind of competitive intensity that seems to be growing. I mean, that's been happening for a while now. And as you heard the HPX representative talking about, how they're getting market share at the cost of the dominant players' market share. So it's very clear you were the only boy in town doing this. Now you've got other boys coming in. It's going to be definitely a little bit of a reset. till the overall market starts growing, it's going to be an impact. And that's what I think some of the brokerages are also anticipating. So I used to have a very positive view on the stock, but it's gone 5x, 6x from there on. And now it's come back after the split where it is. But I would not definitely look at it with the same thing. The entire sector is going through a re-rating on the generation and distribution side. So there's far more better opportunities there rather than the small pocket of exchanges, which is still a very rapidly evolving environment. So I would stick to the boring power generators, distributors, and look at how some of them are done. The NTPCs of the world, the BHELs of the world. I mean, there's lots happening there. And it's a great sector to look at for the next year and a half.
Even now, BHEL has moved to the high point of the day. Power Grid has rallied close to about 1.5%. So that's a space which is seeing a lot of interest. Do stay on, Prakash. Need to slip into a break. We'll come.
Well, some concerns being raised by Macquarie over there. Prakash, your thoughts on life insurers? And I missed asking this earlier. The DMart debate that Mangalam was talking about at the start of the show, that was pretty interesting, with Motilal saying that this is a good time to buy, stocks not run up. So life insurers and DMart, quick take.
Okay, so let me take DMart because chronologically that came first. I think the Motilal report just talks about a 25% upside on the EV/EBITDA basis, because it's more to do with it moving from 36 to 40. So fair enough, 4,000 going to 3,000 going to 4,000 plus whereabout. Interestingly, what they've done is they've been able to maintain margins and probably chosen they've been a bit selective in terms of which pockets they want to grow. They've let go of market share to the likes of Zudio and Trent and some of the other competition. But that's fine. I think it's got its product mix right. It's got the price points right, the segment that it's addressing. And if it starts scaling up, you'll get it. But I've always found DMart to be expensive, so it's not a recommendation to buy even for this upside. But it's a great business that will continue to do well for the people who have invested into at lower levels. But it probably is too pricey at this point. On life insurance, if Macquarie has its say in terms of bringing these prices down and saying the view is neutral on these companies, I would definitely want to buy these and create a basket of all the top 3 private insurers, for the simple reason the growth story in India is a secular story based on growth in participation, in penetration, and it's not a margin game. So, as more and more people get covered, and the digitization impact is now making it much more rapid. And there have been a little bit of, upset. We saw some viral video on a private sector bank pushing insurance to its team. And, there'll always be these blips here and there. But I think the growth story is very clearly long-term and intact. And any dip would probably be an opportunity for people who have not yet added this to the portfolio in terms of a long-term coffee can kind of outlook for the next 10, 12 years.
Okay, well, Prakash, it's a good chat as always. Have a fantastic weekend. I hope you're catching up on the big tennis game later today. I don't know if you're a fan, but I plan to.